Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. Before I introduce today's guest, I have three short housekeeping items to cover. First, if you like our content, the best way to support us is simply to like, subscribe, comment, or share this episode with your friends and family. Second, we are active investors ourselves and are always on the lookout for mobile home, RV, mixed-use commercial, and multifamily properties in MSAs with a population of 100,000 or more. So if you are also an active investor and have something you think we may be interested in, we would love to take a look. Send us the details of the deal at www.therealestateinvestingclub.com. Third, if you are a new investor and would like to learn how to get started or scale your real estate investing business, go to www.therealestateinvestingclub.com to check out our course. So without further ado, let's dive right in. We have a very special guest with us today, so buckle up, grab your pen and paper, and enjoy the ride. All right, and we are live. Today we have with us Brad Shepard. Brad is the managing partner of Sugarhouse Investments and a co-syndicator of commercial multifamily. Brad, thank you very much for hopping on the show today. How are you doing?
Doing fantastic, Gabe. Thank you very much for having me on.
Absolutely. To get everybody started, why don't you tell everybody who you are, what you do, and how you got started in real estate in the first place?
All right. It's a little bit of a long story, so I'll give you the short version. But yeah, I think I could attribute the deal's initial interest in it, like many people, back to that Rich Dad, Poor Dad, first reading of that back in college.
I love it. Everybody says that. It's like the
real
estate Bible.
It's an eye-opener. If for nothing else, it's just an eye-opener.
Yep.
But I was actually doing a finance degree in college, and I already had an eye to go towards commercial real estate. That was my plan. I wanted to get an MBA, go down that path. So I actually interned with a commercial property operator right up there in your neck of the woods, up in Seattle.
Nice.
So I spent a summer up there. They were developing. They owned a couple of the malls downtown. I loved it. Came back from that, and then actually picked up my first rental property shortly after graduating from college, and went down different paths, but always had this eye towards real estate. And so as I was doing other jobs, started building up my small little portfolio of rental properties, came to Texas about 10 years ago and started doing a little more active residential deals, the fix and flips and a little bit of wholesaling, that kind of stuff, built up a little portfolio here, and just realized I'm missing the boat. I like that commercial stuff. What am I doing with freaking picking out tile and working with these contractors?
HGTV really sells it, man. They really
exactly right. It makes it look so much fun. And then all of a sudden your contractor makes off with $1,500 or something like. They don't show that on TV. That sucks. So then, So then the question was, how do I get to that commercial real estate world? And I started learning a little bit more about the syndication model that normal mom and pops can do. Normal guys like us, they don't have to be these fancy mall operators or companies building skyscrapers. Like, we can do this stuff. So I started looking at that path. Was starting to build relationships with brokers to source out my own deals, and then partnered up with some people here in Austin who are already working on these fronts and these opportunities. And I found a good little niche partnering with operators already in the business and playing my specific role in helping them grow their business, helping them with due diligence, working with investor relations and raising capital, et cetera. So that's been my role for the last 3 or 4 years, has been primarily working with a handful of different operators in this capacity, the investor relationship side, capital raising side, as well as other aspects that I can assist with. So that's been, I've loved it. I feel like I found my home.
Awesome. I love it. So you're, your bread and butter, your wheelhouse is really raising capital, right?
That's where I spend the bulk of my time.
That's great. So I'm happy to have you on the show, because that's a big thing when it comes to, a lot of investors, even myself, we get started, you start out with the wholesales, you start out with the fix and flips, and then, you're like, man, this is a lot of work for the money that I'm making.
Right.
And so you put
Totally.
your eyes on those bigger, the bigger deals like multifamily, I'm doing mobile home parks, things like that. But you quickly realize that shit, I need money. I need like real
Right.
money to get these done. And
Yes.
in order to do that, you need to raise the capital. So I'm glad you're here to talk about that subject.
I remember when I first started getting into the active stuff here in Austin, there was a guy I could see was doing some cool deals. He was doing some development stuff. I wanted to pick his brain. Took him out to lunch. I wanted to ask him all these questions about flipping and developing. And every time I asked him a question, what would you suggest, or what would what do you think about this? He'd say, "Look, if you can learn how to raise money, you'll never want for a position in real estate." And I was kind of bugged at it. Like, that's not what I'm talking about. I want to learn how to flip a house.
No, man, what tiles should I pick out? Come on.
Exactly. Come on. I want to pick out some carpet. And then finally, years later, it dawned on me, oh, that dude was right. I need to learn how to raise capital. And you learn how to do that, and you become really valuable to all sorts of different people.
Yep, absolutely. Capital is it's the thing that gets deals done, because some people are really good at, I'm really good at finding deals. We do a lot of off-market marketing, but you can't do anything unless you have the capital to move on it. So,
There we go.
and it's interesting. You got started with Rich Dad Poor Dad. So many people have said that. It's like, it's like the Bible. People always get started there.
Yes. It's definitely the eye opener. I think that's the best part of any book, right? Is if it makes you think differently, and that book just makes you think differently.
Yep. And so you did fix and flips and wholesales for a bit.
Yeah. After just kind of picking up some just lazy, simple rentals, before we came to Texas, when we came here, we wanted to do just a little bit more active. Wholesale, just a couple of deals. I was never wanted to be a wholesaler, but it was just deals that I didn't, would get under contract and realize I didn't like them. So I could, just flip that paper, but then did some flips here. A couple I did on my own, a couple I partnered with a contractor, husband and wife team, and just, experienced it, and glad I could say I had the experience and move on.
Yep. That was my mentality. I've had a few flippers on, and I give them a lot of props, because
Sure.
It is hard. It's a hard job, and if you do it once, you realize like, damn, that's a job for sure.
Yeah, and it is a job, and it's very active, and it's not the, I would rather have the day job, go down the MBA route and do that kind of stuff and working with professionals, as opposed to doing the active work of flipping. So some people are good at it; they love it. I would prefer to do an office job compared to
dealing
flipping
with contractors.
Right. Yeah.
Yep. Awesome. So, but let's talk about what you're here to talk about, syndicating and raising capital. So, this is, I already said it, I'm beating a dead horse here, but raising capital is super important.
Right.
So kind of take us through your mindset, your mind frame, and your process when it comes to raising capital for deals.
So just given my work background over the last 20 years, I've built up a good network, personal relationships of folks who are smart and successful in their own fields. They are good at what they do. I've got a good handful of doctors in the family. They think they're good at everything. But then it comes to this conversation of where do these people put their dollars? And most of them are just used to the 401k options. Maybe it's a self 401k. But the idea of investing in a group real estate investment is news to a lot of those people. And I've really enjoyed those conversations. We're talking to people who are successful in their own industries, introducing this new idea new to them, this idea of a group investment where you can invest your dollars instead of some mutual fund that's really ill-defined and fuzzy. You have to get deep into a prospectus to understand what you're actually buying. Hey, look, we're going to buy this 300-unit apartment complex right here next to this amazing development called the Domain here in Austin. You can drive over there and park in the parking lot, touch it and feel it, and be a part owner in that piece and generate amazing returns, amazing tax benefits. So that's my mindset, is how do I get in front of more of those people and introduce them to these alternative investment assets that they may not be accustomed to considering for their portfolios.
Yeah, absolutely. So how does most most times that you raise capital, it's not from people in real estate. It's from, I mean, as you're talking about doctors, engineers, things like that. People have money and they just want a place to put it. So how do you broach that conversation with someone who does not have the real estate background? Like, how do you set it up? How do you get them to understand that it's not as, there is risk in all investments, obviously, but it's not as risky as they would perceive it to be.
Yeah, that's a great question. So for me, with a little tangent here, I find value. I have found value in going to real estate meetups, but not for raising capital. I like going to places where I'd generally be the smartest person in the room in regards to real estate investments. I go to a real estate meetup, I'm definitely not the smartest guy in the room in terms of real estate. And there's plenty of opportunities. And those people, you get a lot of people who are just kind of starting off. But you go to a different room where different networking groups, different whatever forums where their specialty is not real estate. And it's building personal relationships, first of all, right? That's always got to be the first step is I get to know you. What do we have in common? Do we have, hey, I know so-and-so, you know so-and-so. Wow, that's interesting. What do you do? What do I do? And then it's some kind of soft question about where they like to, if I feel comfortable enough, I'll even ask them about their current investment strategies, and how those are working out for them. That's something that most of those people frequently like to talk about. Others, like I think of a good friend we have here in Austin. She actually just moved to Houston. She's an ER doctor.
Oh, wow.
Does well, makes a lot of makes plenty of cash. I asked her about her investment strategy, and there's really not any strategy to it. I
got a bunker in my backyard. I just shove the cash out there.
There you go. And so she's smart, obviously incredibly smart, but the financial piece is maybe a weak spot. And so there, rather than I'm asking a question about investment strategy, I just say, hey, you actually are pretty handy. I know you like to do some home projects. I know you own a rental property or two. Have you ever considered larger commercial deals like apartment complexes? And then it's, oh, what do you mean by that? Perfect. Now I can explain group investments that really appeal to an individual like that who, she understands if a tenant moves out, she doesn't have any capital. But where I introduce her to an opportunity where, hey, there's 400 units here. If a tenant moves out, that we still have 399 that are still actively paying, and we'll get that other unit empty unit filled next week. And because you're coming in with a group and professional management, you lower all this risk. You're not going to get a phone call about the toilet, and it really speaks to that kind of individual.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. Gotcha. So it sounds like you really do start it with, relationship building, which is great. It's not a hard sell. You don't go in there and be like, hey man, you need more money. I've got a deal. Let's do this. You start to ask them about, talk to them about maybe what their situation is currently in their finances. And then slowly start to broach the subject of, we have this opportunity, et cetera, et cetera.
Yeah. And, and as I work with, I'm looking for a accredited investor. So they're clearly, they're smart, they're successful in their field. And so it can be a simple question. Hey, obviously you're doing well. What do you like to do with those extra dollars? Mm-hmm. Where do you put those? What do you enjoy investing in? And with those, discretionary funds. And then it's just ride the wave from there, wherever they take it. And of course, introduce them to these kinds of opportunities in the commercial space.
Awesome. Yeah. And I'm sure it's an easy conversation on your end because I mean, you are helping them. There is no real sale involved because in my opinion, real estate has the best returns when you're looking at it from every different angle than any other opportunity out there. So there is sometimes when you're selling something, you feel like, I'm not sure if you need this, but it is a great product.
Right.
So here, check it out. But real estate really is a great product. It's good for anybody that has money. So.
You're right. And so, it's kind of funny to think about it as sales. I guess it kind of is, but I've never really thought about that because it is, you come across it more educational.
Yeah.
And at times, especially during the last 6-7 years, the stock market has been awesome. And so, coming in and saying, hey, I've got a better return or something that's competitive could be a little bit, not adversarial, but they're doing great where they're at. So why should I consider something else? But now the last 5 months, right, you're seeing that volatility all over the board. Stock market is not correlating to the reality that we're all feeling. It changes the conversation. People realize, okay, I want off this roller coaster. I want something more tangible, something I can see and put my hands on. It's never felt to me like a sales conversation because it's fun to just tell people about it.
Yep.
And share.
Yep. Educate the opportunities that are out there. Awesome. Well, so what's your guys' plans next? Like, it sounds like you do a lot of partnerships with different operators. So do you have something huge on the horizon, or are you guys raising for any specific opportunity right now, or?
Yeah, right. I mean, it definitely is right now where everybody's trying to get their feet underneath them again when, Q2 was such a big question mark where the rug got all pulled from underneath all of our feet. So a lot of the partners that I work with, we put things on pause, including some of the current projects. We maybe slowed down a little bit on some of those renovation efforts. Those are coming back up. And so it's okay. There is a market, there is activity, there's, guidelines have changed, but there's still, there are deals and there are deals coming. It's a little hard to underwrite right now. So we're still taking it pretty cautious, but still, at this point, picking up the deal flow activity again to underwrite what we're used to, so that we can get back in front of these investors with opportunities that we feel good about. We're working on an opportunity down in Houston. We've already been able to negotiate an 11% decrease off of what we had under contract for.
Oh, great.
Is that good or is that bad? It feels good today, but is in 6 months, should we have negotiated better?
50%, yeah,
exactly. Right. So there's a lot of unknowns, and we're trying to account for that, which is tough. So you have to make a lot of assumptions, but we feel comfortable jumping back in, and we'll miss our targets as far as the number of deals for 2020, but we feel like we're okay now to kind of start turning the faucet back on and getting back in action.
Great. Yeah. I love to hear that. There's even a lot of people on the show, we're all kind of unsure about what's happening, what's going to be happening over the next year. Obviously, we're hoping for good things, but you never know with COVID. It's been a wild ride.
So many unknowns. I think the idea of a V-shaped recovery, that's out the window. It's going to be a little longer haul than that. But at the bottom line, there's a reason, we've always said these kind of assets are recession, not proof, but recession resilient. Mm-hmm. Everybody will continue to need a place to live. Mobile home parks are a great spot. Those people aren't going anywhere. Yeah. People need a place to store their stuff. So we're in a good asset class, in my opinion.
Yep, absolutely. Well, hey, Brad, we are at the end of the episode. It goes so quick. Before we leave, I have a few questions, really quick questions to ask. We'll just spitfire them out. The first one is about books. I love asking people about book recommendations. So if you could give one recommendation for real estate and one for just living life well, what are those two recommendations?
The one that pops into mind for living life well, and this might tie over now to the real estate side, but the Miracle Morning.
Oh, nice.
By Hal Elrod. Yep. Yeah, I think that one is. I've always been a morning person. It's been more challenging post kids, but I love the structure that he provides. That's a great way to start your day.
Absolutely.
And then I think they're just coming out, or is already out. There's the Miracle Morning for real estate investors.
Oh, no
So,
way. I didn't know that.
yeah, they're
That's
doing a
funny.
series off of it. So that might be worth checking out as well. Tie that into the real estate side.
Perfect. Cool. Well, we also, we use apps and tools every day. I think we have too many, but some of them really do help. So if you could give a recommendation for one app or tool that you use that you think actually, contributes to your productivity and fulfillment in life, what would that be?
I run my world off of Aweber as far as that's how I stay in touch with my investor database. Yep. People can accomplish the same thing with a MailChimp or a Constant Contact. My teams, exactly. My teams, as far as communication goes, we're big on Slack with various operator teams. We're all hanging out on different Slack channels. I'm a fan of that. That cuts down on emails, and rather than text chains being all over the place, Slack kind of puts it all in the same spot on one app. So I like that as well.
I love that, man. You're not the first person to say that. Me and my partners, we use Facebook Messenger, but I feel like we need to upgrade to Slack because, that idea of having a channel for specific things like, due diligence, underwriting, all that sort of stuff, keeping the conversations in one area, that's very appealing to me.
And it's kind of funny. My wife's family all decided to jump on Slack. So now I've got like a family reunion thread going as well. And I've got a church group on Slack. It's like, well, I'm just running my life on Slack now.
I love it. Awesome. Well, the next question, you've had a long career, a lot of success, a lot of ups and downs. If you could go back to the Brad who was just starting out, just leaving college and, getting into the work world, and give him one piece of advice moving forward, what would that piece of advice be?
Oh, that's a good one. I don't regret anything. I've definitely lost some money on some deals. I've had some flips go south. I've paid contractors ahead of time. I hadn't paid them. All things I would have done differently, but I've learned lessons that were incredibly valuable. I think where I would go differently is earlier in the course of that path, partner up. Yeah, I tried to do most up until the last handful of years. Try to do it as a lone wolf approach, and that'll get you somewhere. But you can go so much farther when you partner up with teams. Whether that's partner up with a contractor to do some flips, or partner up with a buddy to do some wholesaling and some rehabs or whatever, or partner up with some expanded teams to do syndication. If you get out of that lone wolf, I can do it all kind of mentality, I would have been much better off had I gotten rid of that much sooner.
Yeah, I 100% agree. Bringing partners on, it's not only just they have different skills than you, it's also just motivation for me, because I have somebody to go with and talk with about what I'm doing. And so I started out lone wolf, and I'm glad I'm partnered too. So I love that piece of advice. Yeah.
And it's good to get to know, partner up with people and like, so spend some time, don't jump into it too quickly, but it does definitely go a lot further when you find some folks that you work well with together.
Yep, for sure. Last question. You've given us a lot of advice, a lot of good thoughts to think about. I'm sure there are people listening and watching who would like to reach out and get in contact with you. What is the best way for them to do that?
Best way for sure. My website, sugarhouseinvestments.com.
Sugarhouseinvestments.com.
There you go. Just like it sounds. And Sugarhouse, I mentioned, I might have dropped it in there that I'm originally from Utah. My favorite neighborhood in Utah is a little area called Sugarhouse.
Oh,
so
nice.
That's where that name comes from. Yep. So Sugarhouse Investments. It's a little nod to my Salt Lake roots.
Perfect. So if you want to get in contact with Brad, reach out, Sugarhouse Investments, that's investments plural, .com. I will also put his LinkedIn URL in the show notes. So if you want to reach out there, you can as well. Again, perfect. Brad, thank you for hopping on. I enjoyed our conversation. I'm sure everybody else did too. For everybody else who is here on this journey with us today, thank you guys for showing up. We couldn't do it without you. Again, the best way to support the show is just to subscribe, like, and share with your friends and family. And I hope you guys have a good week, and we look forward to seeing you on the next episode. Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.